All right, let's talk about VA one-time close construction loans. I'm Brandon Woolley, VA Mortgage Guru, and the VA one-time close, OTC as they call them, construction loans, is a very, very hot topic, hot item, something that a lot of veterans are considering this day and age in this current market. Might as well build my own home, or maybe it's your forever home and you're wanting to build where you're going to live at for the rest of your life after retirement, or maybe you're just trying to build a barn dominium or a modular home, maybe a little cheaper, and get the same square footage. Whatever it may be, I worked on more of these probably in the last 2 to 3 years than I have the other years of my entire career. I probably need a hair construction loan maybe, but, anyway. What I want you to realize is that if you're looking at this particular product, it's not just as simple as, hey, here's the product, I'm a veteran, I'm eligible, I could go get it. There is more that goes on with the program behind the scenes. There's a limited number of actual lenders that do the loan, so the options are limited, and the way that they do it, we are, as lenders, tied to their process, tied to their fees, tied to how they want everything done. So a lot of that stuff gets missed because, one, a lot of loan officers have little to no experience with them. Even a lot of VA experts, if you will, or people that do a lot of VA loans. I won't name any names, but there's a national lender that's number one in VA loans in terms of units, maybe the most costly, but whatever. They do a lot of VA loans, and they don't even do the VA OTC loan. So one fact I want to throw out there is you have to consider that really about 50% of these loans close. So only 50%. So that means you start the process, you got the builder, you got the plans, you've paid for those, you've gone through this whole other, preemptive process to get to all the way through, and then, or get an appraisal done or whatever it may be, to where anything that starts, only 50% close. And so when it comes to these big lenders like that, they don't want to touch it because it's not a return on their investment of time and money. So does that mean you shouldn't consider it? Absolutely not. But what I want you to consider is that there may be other options out there that could be a better fit. And so I want to dive into those for you. All right, let me get my hat on real quick because the sun's kind of diving in my eyes here, and that feels a lot better, and I could open my eyes. Maybe you can see my eyes finally. But there's pros and cons to everything, but in my opinion, what is best is if you find a builder who is willing to carry the build note, the construction note, while the home's being built. They carry the risk during the construction phase. You want it, hopefully it motivates them to get the house done in a certain time frame. And then when it gets near completion, you write the final contract, because that's another thing is where you start, you may do some, put in some custom cabinets or countertops or whatever it may be. So the cost of this could change throughout. So once you get to the end of the construction phase, then you write up the contract for you to do just a simple VA purchase of the home. They still have to provide a lot of builder docs, and that's fine. But in terms of the loan, that's a lot easier. They should have, hopefully, a relationship with the bank where they can get construction financing to fund the phases of the construction, and then you do the VA purchase of that loan. And the reason why I like that the most is because, one, the rate's better, it's easier, and it should be less costly, and I'll explain that when I actually get to the VA OTC portion of this video. One thing that I don't like necessarily is that you are risking interest rates. So instead of taking a rate today, you're basically forfeiting or delaying what rate you're going to get until later. So if we're in a market where rates go up, then you could eventually be paying a higher rate when that time comes for you to do that purchase and close on the loan and get the builder paid off. But a good part is if it's actually rates trend down, then you're actually going to get a better rate at that time. And maybe the builder, once you get a pre-approval letter or whatever, hopefully someone like myself or another lender can provide that for you to give them the confidence of, hey, if I'm going to go take out this construction loan at my bank and I'm going to be spending time and money putting this build together, then you're going to be able to buy this home in the end, especially if it's a custom build. But then they may require, $5, 10, 15, 25,000, whatever, $1. They may require something down, maybe none. But whatever builder you find that's willing to do it, you may just have to kind of play by their rule. So keep that in mind. And then even if you don't follow through with it, hopefully they could sell it either way. But obviously the whole idea of getting into that agreement is that you will be buying it at the end of that construction. So while VA OTC construction loan does serve its purpose, I like that option the best. There's even a second option, though, that I like better than the VA OTC, and that is if you use a local bank or local credit union. And I get it, that cuts someone like me out of that process. I'm essentially forfeiting commission. But forfeiting my commission as a broker is worth it if I feel like it's the most advantageous for you. And the caveat here is that you're going to need probably a down payment or equity. So this comes in handy if you already own the land, if someone's gifting you the land, or you've got a large, or if you have a lot of cash, to put into the transaction, then it's potentially worth it to look into that, because the process or each phase of the build is typically going to be easier and it's going to be potentially cheaper. Then at the end, you can look at doing maybe a VA refinance and seeing if it's worth it then, because then you could even take out up to 100% if you want to take some of that cash back or the equity. You could take it out potentially, as long as doing the refinance makes sense. If rates keep going up, maybe it's better to keep the construction loan. But some of those are usually on a balloon note after so many years, or an adjustable rate after a year or 3 years or whatever. It just depends on the term of that bank or credit union. Now, the reason why I feel like the VA OTC is the third best option, okay, and it comes in handy when can't find a builder to carry the note, don't have the equity or cash to put in to be able to get that bank, the construction note, a local bank, credit union, or an outside lender, and then you don't have any money, then this really becomes the option. Of the two lenders I have experience with, one just doesn't really know a lot about it, to be honest with you. I feel like they struggled to process these loans. And then the other lender, who I like very much, they do charge a large admin fee. And so while, that's the way it goes, they're the ones that have the funds, they control that. So I don't blame them for that. The challenge becomes, then you have this large admin fee to do that type of loan. Well, you take standard closing costs, but now you're throwing on this large admin fee. When I say large admin fee, it's a large admin fee. And they try to say, well, the builder pays for that. Sure, if we ask the builder to pay for it, but they're going to take it, put it in the cost of the builder, which is essentially charging you. So it has to appraise for that to cover not only the cost of the build, the land, but also that admin fee plus your standard closing cost and your prepaids, which is your first year homeowner's insurance and escrow. So consider that. So that's where only 50% of these things, I don't know the exact statistic, but it's about 50%, only a 50% close. Because if it doesn't appraise, well, there you go. And now you got to bring that extra cash to close the loan, which again, you may not have. And that's why you're having to do the VA OTC loan. The other reason it may not close is if you have a builder, there's a lot required from the builder on these types of loans. Builders are really good at building homes. Maybe they're good businessmen, but a lot of them aren't necessarily, if they don't have a secretary or don't have an admin person to take care of stuff, it could be quite inconvenient for them. And sometimes we actually get a lot of pushback from builders in providing the documentation necessary for them to be set up to be able to do the build within the VA OTC loan. So the rates aren't bad with it. The biggest problem I have with it is the cost of the admin fee. It's just, it's so much that it's worth considering other options if you can line it up. So anyway, Brandon Woolley here, VA Mortgage Guru. If you got any questions to follow up, definitely shoot me an email at brandon@vamortgageguru.com. Shoot me a text, 573-356-1101. Visit me at vamortgageguru.com. I'll answer any question you got, even if it's in a state I'm not licensed in. I know people who are, and even if I can just help you with a question, I'm happy to do it. Reach out anytime. Hopefully we can get you all the information and resources that'll help you be successful in whatever you're trying to accomplish around home ownership and being a veteran using your VA home loan benefit. All right, take care. Talk to you soon.